Right friends, welcome back to SBI PO interviews session, and I would like to conduct 4 sessions. Some of the students are asking about SBI PO interviews, and here these sessions I am not concentrating on how to sit, how to answer, but I would like to tell you only one thing: have crystal clear clarity on various aspects. First of all, have clarity on various aspects and answer the question with crystal clear clarity. And if you do not have clarity about any answer, then it is better not to answer. Here the point in the interviews is they will test how clear your mind is. If you say I do not know, it does not matter, but trying to bluff with incorrect answers, that is more dangerous in interviews. So, the idea of learning space is to improve the clarity of thought. With that motto we are working, and based on the request of some students, we are planning to produce 4 sessions, 2 today, 2 tomorrow, 7 o'clock and 8 o'clock, each session 30 to 40 minutes, and I have taken 12 questions in each session, and I would like to explain threadbare how to answer when such type of questions are asked, and at the same time I would like to tell you with some supplementary questions also. Whenever in interview, if you are asking for some particular question, most important aspect to remember is supplementary questions are also expected while answering one question. If you are uttering some new word, then immediately interviewer may ask question based on that word. So, please be cautious, have crystal clear clarity, whatever is coming from your mouth, that is the success in the interviews. Right friends, the first question is, this is very much in the news. I would like to discuss somewhat informally because this is interview discussion, and nowadays consolidation of banks, alternative mechanism, prompt corrective action, then the bankers strike recently, then these are all the issues, as well as rupee rise and GDP growth, demonetization, GST. These are the issues concerning banking and economy as a whole. But if you look at other aspects, equally important issues are there. The issues pertaining to triple talaq, the other issue other than triple talaq is this right to privacy. So, those things are also important. Let us look at question by question. Sorry. What do you understand by prompt corrective action? Why some banks are kept under PCA? What is meant by prompt corrective action? What do you understand by it? You have to explain in such a way. Some of the banks are kept under prompt corrective action by the Reserve Bank of India with the intention, please correct yourself, please correct the parameters. There are 3 parameters pertaining to this prompt corrective action, and when these parameters go down below particular value, they will be placed in category 1, category 2, category 3, like that by Reserve Bank of India. So, when the parameters are going below certain level, then Reserve Bank of India will keep the banks under prompt corrective action. And in recent times, I think these 6 banks were kept under prompt corrective action, and the facts and figures may not be that important, the concept is more important. And here these 6 banks were advised by Reserve Bank of India to improve various parameters. Here you see this prompt corrective action framework by Reserve Bank of India. This was in fact revised from April 1, 2017, and in the previous financial year, based on the parameters by March 31, 2017, here provisions of the revised PCA framework were effective from April 1, 2017, and this prompt corrective action framework is to be reviewed every 3 years. And here, other than this parameters also, Reserve Bank of India can take action. And 3 important aspects. One thing you should not forget is there are 3 things which the Reserve Bank of India monitors, and One is capital, second one is asset quality, third one is profitability. So, these are the key areas for monitoring the framework, that is prompt corrective action framework, and the indicators are, if you look at capital, when you are talking about capital, the indicator is capital adequacy ratio, which is 9%. So, capital adequacy ratio, the other name for capital adequacy ratio is capital to risk weighted assets ratio, both are almost one and the same. So, capital adequacy ratio as well as this capital to risk weighted assets ratio, both are one and the same, and when you are talking about capital, that should be 9%. Second one is asset quality. What is the meaning of asset quality? Asset quality means the quality of the loans. What is the quality of the loans? So, to indicate that non-performing assets are there. All of you are familiar with NPA. So, the second one is asset quality. Third one is this profitability, that means return on the assets of the bank. So, these three are the parameters to check capital, asset quality, profitability, and depending on the parameters, risks are classified as 1, risk threshold 2, risk threshold 3, right. So, I hope that you got the point. Here 3 important parameters are there, and when they go down below particular level, then the banks will be put under this prompt corrective action framework, right. Second one is public sector banks are having more percentage of NPAs in comparison to private sector banks. If you look at private sector banks like ICICI, HDFC, Axis, if you look at SBI, Canara Bank, IDBI, like that, the public sector banks have got more percentage of NPAs in comparison to private sector banks. What is the rationale behind it, or you can say, how do you explain this paradox? What are the reasons why the NPAs are more at the first instance, the non-performing assets? What are the main reasons? In the interview, you cannot tell all the reasons, but you can tell some of the reasons. One is stress in some sectors, like I think you may not be able to tell this, actually this is the reason. Inefficient credit appraisal mechanism in public sector banks, but when this type of question is asked, why the public sector banks have got more percentage of NPAs in comparison to private sector banks, then this is one area actually, and directly if you tell this answer, it may go against the bank authorities, so they may feel something bad, so better not to tell this, but it is the actual reason. You can tell there was a stress in some sectors like steel infrastructure. Second one is clearances like environmental clearances, forest clearances, land acquisitions, they were delayed the projects, and political interference in granting the loans in public sector banks, political patronage of borrowers, these are some reasons, and global downturn after 2008. And this point you should not say banks have not exercised desired prudence, leave those aspects. I would like to explain in a nutshell. This public sector banks, there is political interference, and public sector banks have given more loans for corporate sector, but private sector banks, please listen carefully, public sector banks have given more loans for the corporate sector in comparison to private sector banks. Private sector banks are very careful while giving the loans, and public sector banks, the credit appraisal mechanism, of course I have already told you better to leave this point, but you tell political interference is there in public sector banks, whereas in private sector banks political interference is normally not much or may not be there, and public sector banks have given more loans for project finance, or you can say for various infrastructure projects public sector has given more loans, whereas private sector is very much careful, and private sector mostly balanced their loan portfolio between retail as well as corporate. So, if you look at the private sector banks, they were in fact very careful and they balanced the loans between various retail as well as this corporate, but public sector banks have gone more towards corporate loans, especially during 2007, 2008, 2009 in that, right. So, public sector banks, reasons I have explained, this type of question is expected. Then during 2016, a question is expected in the interview. During 2016, government brought bankruptcy and insolvency code in examination. In interview, you may be asked about what do you understand by insolvency, what do you understand by bankruptcy. Next, do you think that bankruptcy and insolvency code can bring banking sector out of the NPA problem? What is NPA? If you go in detail, suppose Essar Steel has taken 1000 crores from SBI, but Essar Steel failed to service the loan, that means failed to pay back. If it crosses 90 days, then it becomes NPA. Like that, almost 10% of the loans became NPAs, and now you see Essar Steel failed to pay back and government brought bankruptcy and insolvency code, and this was brought in 2016. What is the purpose behind bringing this code? In the business, failures are common. No one can stop business failures. When business fails, then there must be sufficient mechanism to come out of that crisis. That means SBI, which gave the loan, Essar Steel, which has taken the loan, both should come out. So, to devise the mechanism for bringing out both the lender as well as the borrower, this bankruptcy and insolvency code was brought, and here bankruptcy and insolvency meaning, please look into this. Insolvency is the state of being unable to pay money, and bankruptcy is the legal status. When Essar Steel has taken the loan and it failed to pay back, and the legal status is known as bankruptcy. So, to bring the company, both Essar Steel as well as SBI, I am taking only as an example, this bankruptcy and insolvency code was brought, and here insolvency professionals will be nominated, and subsequently proper mechanism is to be completed within 180 days, which is extendable by another 90 days. That means if any company is in trouble, then justice is to be done for the creditors. So, an amicable solution is to be brought in 180 days, right. So, that is the purpose of this bankruptcy and insolvency code. If a question is asked, can it bring the banking system out of crisis? Your answer should be, it is too early to say, because we are yet to test it. Recently, 12 accounts were referred to this National Company Law Tribunal, so as to resolve the cases through this code. Please do not forget, NCLT means National Company Law Tribunal. Recently, banks have referred 12 cases based on the advice of Reserve Bank of India, and it is too early to say whether the bankruptcy and insolvency board of India is able to solve this problem, or you can say National Company Law Tribunal is able to solve the problem or not. Do not confuse, this National Company Law Tribunal is the entity which will solve the case based on bankruptcy and insolvency code, right. But overall answer is, it is too early to say, because we are yet to test the mechanism of bankruptcy and insolvency code. So, I have given here what is the process of dispute resolution, you can go through it. And in the interview one more question can be asked, what do you understand by twin balance sheet problem? Frequently we are talking about twin balance sheet problem. Here you see, let us assume from State Bank of India, Kingfisher Airlines has taken rupees 2000 crores loan and this failed to pay back, and subsequently Kingfisher Airlines is also affected. Similarly, another company, let us take for example, company is also affected. Here its money bank is not able to get back, so bank is also affected. You see, bank's balance sheet as well as company's balance sheets, both are affected. Because of both, overall economy is affected. So, this is twin balance sheet problem. Companies have taken loans, they failed to pay back, now both the banks are in trouble, both the companies, or you can say both banks and companies are in trouble. So, this is a twin balance sheet problem, right. So, here banks and corporates, you see, for the banking system, total gross NPAs, that means loans taken by big companies and failed to pay back, or rupees 6.75 lakh crore, which is a 4.5% of GDP. And what is happening to corporates, you see, private corporate investment contracted by 7%. That means instead of expansion, it contracted till December 16. This is as per economic survey. So, because of twin balance sheet problem, both the banks as well as corporates are suffering. So, as to bring this out of this problem, now this let us wait and see whether this insolvency, bankruptcy and insolvency code will come to the rescue or not. Recently, bank unions have gone for nationwide strike. What are the reasons behind their strike? All of you are familiar with the bank strike on August 22. What are the reasons for the strike? Before understanding it, you should have clear idea about what is the government's intention. Government at present, if you see in the public sector, State Bank of India as well as 20 other public sector banks are there. The government's idea is, let us have bigger banks. Let us consolidate public sector banks. Let us consolidate, let us create 4 or 5 bigger banks. SBI is one big bank now within global 50. Let us leave SBI. Let us take remaining banks. The government's intention is, let us create around 4 or 5 bigger banks. What is the government's intention? The government says that with the consolidation, bigger banks may be in a position to develop efficiencies. That means when the bank is big, then it can technologically advance. You see the website of State Bank of India or website of ICICI Bank, compare it with the small bank of United Bank of India. Small banks, you take Andhra Bank. So, small banks normally do not have much resources to develop. In fact, during the past few months, or you can say for the past 2 years, the share of the smaller banks is shrinking in the public sector, whereas the bigger banks are expanding. So, the smaller banks are not able to go for technological advancements. At the same time, smaller banks will have several problems, and here the government's intention is to consolidate the banks so that bigger banks will be in a position to deal with the situations better. They can advance technologically, and their iBanking systems and other systems they can advance in much efficient way. So, when the banks are bigger, another advantage is they can acquire greater specialization. When they are getting specialization, what happens? When banks get specialization, their credit appraisal mechanism will increase. Smaller banks are facing big problem while giving big loans because their credit appraisal mechanism is not up to the mark. So, here with these intention, government is going for bigger banks. But what the unions say? Unions says government wants to privatize the banks. This is the first step towards privatization. Then when the banks are consolidated, then there is a possibility of not much recruitments, and at the same time some of the positions, some of the staff may be given voluntary retirement also. So, here there are ways for privatization, and the unions are not accepting because they feel that VRS may also be given, and this is the first step towards privatization. With that intention, the unions main contention is there are gross NPAs, please collect money from the big companies, right. So, that is the union's intention, but government is going ahead. Government already decided to establish alternative mechanism. Through alternative mechanism, government will decide which banks are to be consolidated, which banks are to be amalgamated, like that. So, this is the contention of this unions. So, I explained in detail both the sides of the story. So, you can explain in similar terms. What is your opinion about consolidation of banks? Can the amalgamation? What is amalgamation? Technical meaning I will tell you. Amalgamation means when two banks coming together and all together, legal name is changed, all together a new company is established, a new legal entity is established, that is amalgamation. What is merger? Merger means, classic example is State Bank of Travancore merging with the State Bank of India, State Bank of Hyderabad merging with State Bank of India. But when two companies are amalgamating, technically speaking, they should become another legal entity, that is amalgamation. So, here can the amalgamation or merger of banks bring the banks out of the problems being faced at present? How to take stand on this about consolidation of banks? Probably it is better if you take the government's version than going for the version of unions. Take the government's version. Government is going through alternative mechanism. So, alternative mechanism will decide. And first of all, what is the need for consolidation? You can start with when the size is bigger. When the size is bigger, they will have better capabilities, better efficiencies to stay much more efficient, or you can say they can compete in the competitive space. You see, when the bank is big, they can develop technologically high expertise. At the same time, credit appraisal, they can develop high expertise. So, like that, efficiencies will increase. So, future is going to be digital banking. So, for digital banking, it requires a high-end technological upgradation. It is possible only when the size is big. When small size banks are there, technologically they are not able to compete with bigger ones, right. So, you can go for the positive opinion about the consolidation of banks. Do not talk about the job losses or other aspects talked by unions. Better to go with the opinion which the government is stating. Government is not telling that job losses will be there. Government is telling that when the banks are merged, when the banks are consolidated, then it will lead to increase in the efficiencies. You see the difference between small bank and big bank. SBI operational efficiency is much higher in comparison to smaller banks like maybe Andhra Bank, maybe Vijaya Bank, something like that, right. So, you can take that stand. And here another thing which comes to my mind is the government clearly stated that alternative mechanism will be created, and the alternative mechanism will take the decision with regard to mergers, and the mergers will be based on commercial considerations only. So, when the merger takes place with the commercial considerations, then probably government will take care of all the aspects. Then final decision will be taken by central government in consultation with the Reserve Bank of India. So, these things please do not forget. Amalgamation, I have already told you, company A, company B, when these two are amalgamating, a new legal entity will come up, let us say company C, right. There is a viewpoint that India need 4 to 5 banks of global size. What is your opinion on this? Certainly, big is better. We require smaller banks as well as bigger banks. You can take this opinion, and 3-4 points you can explain. Here, future is digital banking. At the same time, to serve the population, now we are coming up with NIC banks or differentiated banks, that is a small finance banks as well as payments banks. Then another aspect is there are several non-banking financial companies which are giving loans for several aspects. That means the point to note here is for doing the smaller things, for penetration, we have got several methodologies. Now you see this non-banking financial companies are there. One example is microfinance institutions. They are penetrating into deep rural areas, but the interest rate is high in microfinance. That is one point you should not forget. And the second point is smaller banks like payment banks, small finance banks. They are most likely they may penetrate in future, and under these circumstances it is better if we create 4 or 5 banks of bigger size. As I have already told you, when size is big, efficiencies will improve, technologically they will be superior, and when the size is big, in fact they may be in a position to go and bring the reputation as global banks, or you can say for undertaking some finances for the projects abroad, then the bigger banks may be in a position to establish their subsidiaries in foreign countries, and that is why it will have lot of competitive advantage. So, when the size is bigger, it will have much higher competitive advantage in the country, right. So, here you can go for this 4 and 5 banks of global size, your opinion can be positive. Then there is a need for separating project finance from the banking sector. Do you agree with this statement? What is project finance? Project finance means, you see, this expressway is being constructed, financing to that expressway is project finance. Financing this expressway is project finance, and in fact after independence, government thought of separating this project finance from banks. Of course, in those days banks were not able to give finance to the projects. That is why in those days government came up with this development financial institutions. In fact, I am not talking about ICICI Bank, I am talking about ICICI, I am talking about IDBI. IDBI and ICICI were primarily established with the motto of project finance. Subsequently, in 1990s, the concept of universal banking came with the advent of universal banking concept. In fact, the project finance institutions, or you can say development finance institutions, lost their relevance, and ultimately IDBI was converted into IDBI Bank, ICICI was converted into ICICI Bank, but now there is a need for separating project finance. Now there is a need for separating project finance. The better experience is this non-performing assets. Now the public sector is facing big problem because of this project finance or financing to the companies. So there is a need for separating this project finance, or you can say there is a need for reducing the burden of project finance on the banking sector, no doubt about it. But the unfortunate aspect in our country is debt markets are yet to be evolved properly. In India, debt markets are not properly evolved. Now the burden is totally taken by almost the banking system. So there is a need for separating this from the banking system, right. Then the bond markets in India are yet to be evolved, and hence the dependence of project finance is on the banking system is becoming huge. Whatever I have told you for question number 8, that also answers this question. The need of the hour in our country is to develop the bond markets. The bond markets are yet to be evolved, and hence the dependence of project finance on the banking system is becoming huge. You see, this is for financing highway. Normally there must be some other mechanism, debt markets, that means issue of bonds, subscription to bonds, or you can say issue of debentures, subscription to debentures, then sale and purchase of bonds in the secondary market. So that is the debt market. In our country, unfortunately, debt market is not properly evolved. So that's why the burden is falling on the banking system. BRICS summit is going to be held in China. Probably during your interview time, this BRICS summit will be going on in China. How does it benefit India, and what is the rationale behind BRICS? BRICS summit, it is going to be held, and why this BRICS came into being? You see, the international economic order, or you can say the global economic order, is written by the multilateral financial institutions which were in fact established after Second World War, popularly known as Bretton Woods institutions. So Bretton Woods institutions drafted whatever is required, that means how the global economic order should be, but the economic order written by IMF as well as World Bank are not suiting the developing countries or emerging economies like India, South Africa, Brazil, China. So a thought came, let us come together, establish the grouping. So with that intention, BRICS group was established, initially BRIC, subsequently South Africa joined. So the rationale behind the establishment of BRICS is that the world order or world economic order established by the IMF as well as World Bank, that is not able to satisfy the economic aspirations of developing countries. The paradigm of development in developing countries is entirely different. So as to take care of the needs of the development of this emerging economies, this BRICS group was originated in somewhere around 2008 or so, right. So this is all about BRICS, and here I have written here the 9th summit is going to be held in China, but there are several contradictions now, because now there is a lot of difference of opinions, or the relations are quite strained between India and China. Recent controversy is the Doklam controversy, right. So 5 countries are in BRICS. There is a feeling that demonetization has not resulted in the eradication of black money, as 99% of the notes returned back to the banking system. What is your opinion? Here you see, at the time of denomination, 15.44 lakh crores were in circulation. I am talking about rupees 1000 notes, rupees 500 notes which were demonetized. So 15.44 lakh crores of rupees were in circulation, and 15.28 lakh crores were back into the banking system. That means black money, that means the notes not returned back to the banking system are just 1%. around 1% of the notes have not returned back to the banking system. Moreover, for printing of new notes like rupees 2000, rupees 500, Reserve Bank of India spent a lot of money. So, here you can argue from both the sides, but better to take the positive viewpoint, know the facts, have the positive viewpoint. Here you see 15.44 lakh crores of rupees, that means rupees 500, rupees 1000 notes were demonetized. What is the meaning of demonetization? The meaning of demonetization is stripping them of legal status. Then 15.28 lakh crores came back to the banking system, only 1% have not come back. That means you can argue in both the sides. The Mr. P. Chidambaram, former finance minister, said 99% notes were legally exchanged. Only rupees 16,000 crores have not returned back to the banking system, but Reserve Bank of India spent 21,000 crores in printing the new notes. So, there is altogether loss when you look at demonetization. This is in the words of P. Chidambaram, but the finance minister Arun Jaitley says that demonetization was not just to weed out the black money, it is to bring people into the banking system and at the same time to increase the digital money or digital transactions, to prevent the cross border counterfeit notes in the country, also to prevent counterfeit notes, to make a dent to the terror financing or terror funding. So, with all these reasons in mind, you can conclude that there are positive aspects of demonetization also. So, here the viewpoint of Mr. P. Chidambaram is this, Arun Jaitley's viewpoint is this. So, you should not forget that the purpose of demonetization, though monetarily it might not benefited the government because GDP also has a slowed down, but there are several positives of demonetization. What are the positives? More digital transactions, then more people will come into the banking system, because digital transactions, when they become inevitable, it will pull the people into the banking system. Then terror funding, that means whatever funding to terrorist organizations, that is one motto of demonetization. Then counterfeit notes will go away from the system, that is most important aspect. So, it will act as a somewhat warning to the black money holders. Now, the operation clean money is going on, income tax department is behind the people whoever deposited more money into the bank accounts. So, operation clean money is going on. So, if you look at all these things, in fact, it is the warning for the black money holders. So, you can conclude on those lines, right. Then GST is good and simple tax as told by the Prime Minister. What is your opinion? Certainly, GST is a good and simple tax, and now all the union territories as well as states have got unified indirect tax system. So, because of this, now a truck can move without borders, without checkposts from Kanyakumari to Kashmir, and there is no problem when goods are entering one particular state, there will not be any hassles. So, this indirect tax regime, which was integrated with the cooperation of the states, this is the best ever example for cooperative federalism. What is the meaning of cooperative federalism? The states, 29 states came together to in fact draft the legislation. So, this is the GST, good and simple tax, goods and services tax, because of which real integration of Indian economy took place. There are no more state borders. That means, at state borders for octroi or for the state duties, entry tax, trucks need not stop. So, this in fact eliminated several bottlenecks. So, it is highly useful, though in the short run it may not give results, but in the long run it may be beneficial up to the extent of 5% or so as per the recent report. That means because of GST, tax buoyancy will increase by around 5% as per the recent report from next year onwards. Right friends, this concludes first part of our discussion. Second part we will do at 8 p.m. today, third and fourth tomorrow. So, we hope that they will be useful because we are touching upon several contemporary issues. Exactly, I may not be telling you how to answer, but I am throwing the idea, I am throwing the crystal clear aspect of each and every aspect, but generally go in support of the government, right, especially when it pertains to demonetization, especially when it pertains to consolidation of banks. Please go with the government viewpoint with clear arguments. When you are talking about consolidation of banks, you have to contend bigger is much better, right. So, with this let us conclude. We will discuss in the second part at 8 o'clock. So, please do rejoin at 8 p.m. today, right.